Well, hello everybody and welcome to this week's edition from the Business Growth Club. In this week's edition, we're going to be looking at the dangers of discounting. As I say, today we're going to be focusing on discounting. I'm going to explain to you what discounting is and what it isn't, and then actually what a loss leader is and what customer lifetime value is and how you use this as part of your marketing strategy. Now, the reason I'm doing this is because I believe a lot of business owners don't actually know the difference between a discount and a loss leader. Or even worse, sometimes they believe they're using a loss leader when in fact they are using a discount. Now, the two are very similar, but actually they're crucially different when it comes to a business and a business strategy and your marketing strategy. So in today's video, we're going to look at this in more detail and explain what discounting is, what loss leaders are, and how you should do it properly, and the pitfalls that you should avoid. So let's start with a definition. A discount. What is a discount? It's a reduction in the usual price of something. Quite straightforward. A simple reduction in the price of something. Whereas a loss leader is something sold at a loss in order to draw customers. Now those two might sound very similar to you, but actually they're very different. In terms of the purpose behind them, the purpose of a discount is merely to sell something quickly. And we sell it cheaply to sell it quickly. We reduce the price of something to sell more of them and to sell it quickly. The purpose of a loss leader is to sell something with a view to selling more. Remember, it said by drawing customers. So we're still selling it cheaply. The offer's still, it's cheaper, therefore we get your custom. But a discount is just selling something quickly at a low price. A loss leader is a strategy that's designed to sell one something so that you can sell lots more items in the future, not a discounted price. So why do people discount? Well, actually the history of discounting is simply to get stuff off the shelves. It's generally only really used to clear slow moving stock. So you've got stock that's slow moving and you just need to get it off the shelves, or you've got a seasonal stock and you need to move it to make way for new stock, that sort of stuff. It can occasionally be used as part of a larger strategy for product launches or sometimes to stimulate sales on very large volumes. However, that's quite a rare situation, and when we say large volumes, we're probably talking at least in the hundreds, if not in the thousands. However, the general point of discounting is to sell something cheaply. That's it. It's a single one-off transaction saying we've reduced the price of something by 15%, 20%, 50%, 70%, whatever, just to get something off the shelves and to get it sold. When I'm saying off the shelves, I don't just mean retail businesses, I mean any business that offers a discount. Now, as I'm alluding to, the problem with discounting is it means you only generate income once. It's a one-off transaction. Now, that's okay when you're using it strategically, as I say, to move stock because you just want to make way for it, or as a product launch because you hope to sell some of them cheap at the beginning to get the product out there so you can then increase the prices in the long term, or for huge volume orders. However, as an out-and-out sales strategy, from one customer to another, selling 1, 2, 3, 4 items in those types of numbers, it's a poor sales strategy. Why? Because there's a huge danger of it. Basically, most people sell on or around their profit margin, which actually means you either don't make any real money, or sometimes it actually costs you money to sell something because it's higher than your profit margin. Now, not only is that pointless, it's actually quite dangerous, because if you're selling something around your profit margin, you're just going to break even, so it's just negative cash flow and breaking even, or higher than your profit margin, where you're actually making a loss. And if you keep making a loss, you'll go out of business because you'll run out of profit. Now let me try and bring this to life by the way of an example. We've got Example & Co here. Let's imagine they turn over 500,000 a year, $500,000. Now let's imagine their net profit, their bottom line profit, is 100,000. Now what does this mean for discounting, and should a company like this discount? Well, they make a net profit margin of 20%. If you don't know your net profit margin, all you need to do is take your profit figure. So that's the one in your accounts at the very end that says net profit. It might say net profit before tax and interest, but it says net profit in bold, and that will say something like 100,000. And then it will say at the top turnover or sales, and that will be another figure. Simply divide your net profit by your turnover, so 100,000 divided by 500,000, and that will equal your percentage. So in this case it equals 0.20, so 20%. Very simple calculation. Just take last year's accounts, take your net profit, divide it by your turnover, and then you've got your net profit figure. So for a company like this, 20% profit, what are they going to do because their sales are slow? Should they discount? Now, to keep it simple, I'm going to say that they sell a product for £100 and they offer a standard 15% discount. Is that a good idea for a business like this? Well, let's have a look. Well, as they normally make £20 profit per sale, that's because they've got a 20% profit margin and they're selling something for £100, so 20% of that £100 is profit, so they're making £20 profit per sale. With a 15% discount, they make 5% profit per sale. Remember, a discount goes straight off the profit level because you've already absorbed all your other costs. So essentially, the real price is £85 minus the £80 it costs to produce it and sell it and all the rest of it actually means they only make £5 per sale, not 20. Now that means, in order for discounting to be effective as an out-and-out sales strategy, i.e. not used just to clear stock or as a product launch, essentially just to stimulate sales and get some more cash in the bank, well, it's a poor idea because they'd have to sell 4 times as many just to make the same profit level. Now, is it likely that with a 15% discount, instead of selling 100 products, you'll sell over 400 products? Well, it's probably not likely. Now, obviously, your business might look different to this. Your profit margins might be higher or lower, and your products might be higher or lower. But fundamentally, this is quite a typical business, and this is the type of situation people get into. They believe discounting is a good idea. They never do the maths like this, and we realise that actually we have to make 4 times as many sales for the same amount, the same standing still. So you have to make more than 4 sales to actually move anywhere. Now, it could actually be worse, as I alluded to before. I've seen many businesses do this, where they offer a discount greater than their actual profit margin. So they offer a 15% discount with only a 10% profit margin. I've seen people in retail and production process businesses particularly do this to a rife level. I've seen it so many times. Sometimes it's even laughable when you see somebody with such a small profit margin and then they offer a discount greater than that. And even worse, I've seen this a lot where people will offer a discount of 15% only on bulk orders. So for their good customers, they give them 15% off, which means you just make a loss even quicker. Instead of just making a loss with one small order, you make a loss with big orders. Even more dangerous. So do you see the dangers of discounting? When it's used just to stimulate sales, you either end up having to make so many more sales just to stand still, or even worse, you make a loss. And if you offer it just to your big customers, you make an even bigger loss, even quicker. Really dangerous just to do discounting as a one-off exercise. Now, I will offer a few caveats at this point just to make you aware of a few issues. I am, in that example, referring to net profit margin as a general term, so that's the overall business. Now, generally speaking, that's enough. But occasionally in a business, you make very different profit levels on different products or services. So you might have what's known as a product line profitability. So it might be you sell 2 different products, and one of them you have a 10% profit margin, the other you have 50%. Well, obviously that makes a very big difference to the way that you are pricing or the way you look at discounting. I would say if you do go down that line, the theory is exactly the same. Instead of net profit figure, look at your product line profitability. But make sure when you do that, you're not looking just at gross profit. You need to look at net profit. Otherwise, everyone's gross profit is much higher than their net profit because it doesn't take account all of the costs of running a business. So if you do that, make sure you incorporate, the absorption of all of your costs. Also, there's something known as customer profitability. Sometimes the 80-20 applies and some customers are much more profitable than others, in which case it might make sense to give bulk discounts to larger customers. However, very few businesses go to this depth. Now, if people offering discounts like this can prove that it's a scientific, strategic, sensible decision because you know what your profitability margins are per customer or per product line, that is a little bit different. But to know that, you'd have to do deep level of pricing analysis or activity-based costing, that sort of stuff, and most businesses don't go to that level. So if you're already doing this and you've actually looked at the maths and it works for you, well, discount what I'm saying, but 99% of the businesses I've met who discount simply don't go into this level of detail and are just hoping that a 15% discount will help their business, and they've never asked the strategic questions. However, Let's have a look what example code could have done. Let's say that they strategically analyse their business, as I'm sort of suggesting you do in this video, and they realise that most customers buy 10 products during their lifetime. We're going to imagine it's that £100 product at a 20% profit margin, just to keep the maths easy. But basically they've conducted a customer lifetime income analysis, and they know the customer's lifetime value is 10 products, 20% profit margin. Now that basically means that they make £200 profit per customer in their lifetime. Now if you do this approach, then you will know that if you wanted to offer a discount, then you'd be losing £15 on the first order, which is no big deal. It just means you make £185, not £200 per customer. Of course, if you do this type of analysis, and you look at your lifetime value and you look at the overall profitability, you might even be able to make the first offer even better. Now you might say to me, well, what's the difference between a loss leader and a discount? Because you've just said that whilst a discount you make a bit of a loss, in the long term you make money on the customer. Well, the issue is that's not true. You won't always make that £200, because a loss leader is literally that. It's used as a loss, making a loss on the first order, in order to lead into sales in the future. Now its history goes to supermarkets, where they offer something like bread and milk cheap to get you into the store, so you'll buy even more stuff, and the other stuff is where they make their profit. Now for most businesses that's not true. It's actually looking at the first order somebody makes, making that a loss in order to lead to future sales. That's fine if that's your strategy, and you have a full strategy for the first order, making the first order attractive, making a loss on that first order so that you can have future orders, and you have customer marketing, and you have a process of taking people through the full customer journey. And we'll be looking at that in next week's video and future videos, how you use this as a full process. This is just the first video in a series, just an introduction to the basics. But as a theory that makes sense. However, discounting, literal discounting, is just a strategy for reducing one sale. It doesn't lead to future sales. In other words, it's just an ongoing discount. The problem with an ongoing discount is you make a loss on the first order, but it doesn't lead to future orders, because you make a loss on the second order. Because businesses that discount tend to discount every time sales are bad. Now that's okay to new customers as part of a loss leader strategy, but just to general businesses, your existing customers, on every single time that sales are slow or you fancy a discount, it makes absolutely no sense, because you discount one order and you make hardly any profit from it. Then you discount the next order and you make hardly any profit from it. And then you discount the next order and you make hardly any profit from it. And you end up with customers who only ever buy from you when you discount, or they buy half of their stuff when you discount and half of your stuff when you don't discount. Well, it gets you absolutely nowhere. So it might sound the same, but it's such a crucial difference between the two. Remember, one of them is a strategy. You have a full strategy for making the first sale, and then using a marketing system with those people who then become customers to making them buy lots from you during their lifetime, so that at the end of the day you've made sufficient profit from them. Strategy. Ongoing discounts randomly to random people just to stimulate sales, in most businesses, depending on their profit margin, will make them either stand still, where they're making hardly any profit per sale, so they have to make loads of sales, or even worse, start making a loss. Now some other caveats, if you will, some things to remember, and as I say, we'll be looking at this in more detail in future videos. But discounting for up and cross-sell items is different. And I'll explain that again in the future, but essentially an upsell is when you make somebody buy something larger. So you go to McDonald's and you ask for a meal and they say, do you want to go large? And that's an upsell. Or they might offer you, say, an ice cream with your meal, and that's a cross-sell. So for up and cross-sell you can use discounting, because that was money you would never have. It's a different product, it's a second product, an additional product that you sell just to stimulate extra profit per customer transaction, in which case discounting can be used effectively. So I'll be looking at that in the future and telling you how you can do that. But if you're discounting up and cross-sell, it's not quite the same argument. However, you still need to be making some profit on it, but sometimes that's very different, because most up and cross-sells are pure profit. Now this is a very important point, so listen very carefully. Sometimes a price-led offer isn't actually a discount. You'll sometimes see this. our great offer for Mother's Day flowers is just £30. That doesn't mean it's reduced, it just means it's a great offer. It doesn't actually use the word discount, but you look at it and you say, oh great, just £30. That looks great value. It might be one of their best value offers, or seasonal offers, or special offer, but it doesn't mean it's a discount. And the most effective marketers regularly use offers that look fantastic, and they build a lot of benefits and value into it, maybe add some guarantees to it, make it very attractive, and make the price look attractive, but actually it's not always a discount. So just because something says it's cheap and it's a good offer doesn't mean we're actually discounting anything. Unless the word discount is used and they say you'll have a 15% discount, it's often not a discount. Also, another point, we use the word loss leader. Now that doesn't mean it has to be a literal loss. It doesn't mean that if you make £20 profit per sale, in order for it to be a loss leader you have to make a loss, so you must be selling it at least £21. A loss leader really just refers to a reduced, poor first sale, a poor first transaction to attract future customers. Now you can make a loss on the first sale, or you can just be discounted, it doesn't really matter, but it's a slightly different idea. Also there is the idea of giving away something for free, or sampling, which isn't exactly a loss leader, but you do make a loss on that first transaction in order to bring people in. Another point I would make, of course, is that price isn't always the best way to sell something. Discounting as a loss leader is an effective strategy, but people don't always buy on price, and it does depend what you sell. And sometimes a discount doesn't work very well at all for different types of businesses. Most retail and product businesses it will work, but services businesses, occasionally discounting works, occasionally there's a better way to approach it. So you don't always have to do a loss leader. It's not the only strategy or the only special offer. If you look at previous videos we've done on special offers, you'll see there's, I think we gave you 19 different special offers you can use, and only one of them was a kind of literal loss leader. However, if you know your numbers and you do it strategically, it is safe to offer a loss leader and offer a discount. Okay, in summary, what am I saying? I'm saying that most business owners don't know the difference between ongoing discounts and a loss leader strategy. And I'm saying you must know the difference. Discounts can be very effective if you use them as part of a strategy to get rid of old stock or a product launch, or for very large volume orders. However, for regular day-to-day orders, it can be a very dangerous strategy. It can lead to you either making no real money and just being a busy fool, or getting into trouble by actually making a loss. However, taking a strategic approach with a loss leader, looking at the lifetime value of a customer, appreciating what sacrifice you're prepared to make on the first order, and using that as part of a strategy to progressively sell more to the customer, to build the relationship, and to up and cross-sell to that customer, and gain referrals from that customer, then it's an effective strategy. So if you do discount as part of a loss leader, make sure you too take into account the lifetime value and use it as part of a strategy. Now, as I say, I am going to be doing some future videos on this very topic. This is the first one to show you the dangers of discounting and how actually people use it incorrectly and don't do their numbers and end up in very troubled water. I've said there's a loss leader strategy which looks similar. That's why so many people make this discounting mistake, because it looks similar and it looks like what all the smart marketers do, but it's not part of a strategy. So in the future I'll be explaining more about how you use loss leader as a strategy. Now that's probably enough for now. Probably introduces you to what a discount is, what a loss leader is, for dangers now actually to do it properly. So if you are doing discounting in your business, start to look at it more carefully and start to do some of the figures I've done in this, because if you have your net profit figures for next week's video, then that will help us to actually do the content, and the examples will make more sense to you. So between now and the next video, I hope you have a great time in business. Thanks very much for listening. Goodbye for now.